income planning gives me the ability to have a predictable, sustainable income that's going to meet my needs, but at the same time, be able to have me set aside money for that growth bucket that we talk about.
What's the case for moving to or utilizing defensive strategies when we see market volatility? We'll talk about it today on Financial Focus with John Kuykendall, founder of GulfCoast Financial Services. GulfCoast has been named Best of the Best in Financial Services for 10 straight years and running by the readers of the Lake City Reporter. So we have good company here, good guidance, keeping us financially focused. We always appreciate the time, John. Thank you for being here. And I am certain that you are probably getting some questions about being defensive as we have seen the market move in the wrong direction a little bit more than a lot of people would like.
Well, Peter, it's certainly a time when we're not used to the market having this much volatility. I mean, we've had some volatility in the past. Every year is different, but we haven't seen the volatility and the fall off that we've seen so far in this market. But you got to remember, I mean, we've had a really good run since 2009. So, I mean, we're due for a little volatility, and new investors who tried to get in at the last minute of the big boom, they're experiencing a little bit of anxiety and wondering what's going on with their money. But now's not a time to be so proactive that you're not thinking about the lost opportunity on your dollars.
Yeah. Well, I know there's a time and a place for risk. We're often told to take risk with our money and our investments for, I guess, several key reasons, all rooted in the idea that the more risk we take, the better the return. And those two things are inherently linked. So do you see, John, that people might be taking more risk than they are comfortable with and sort of that gets tested only when we see market volatility?
Well, that's right, Peter. I mean, Americans are greedy people. We like to win, we like to make money, and we like to have money. And so when the market's going up, people are jumping in. They have this euphoria for, where the cycle, they get in at the top and they have this euphoria. Then it starts to go down. They have a little bit of doubt, and then they get out of the market, and then the market goes back up. I mean, we've seen this over and over again, and it's just part of our cycle. I've always said, on this show that if you can sleep at night, then your portfolio is where your risk tolerance needs to be. Now, I like to sleep and be able to roll, be a little restless because that means that I'm conservative, but I'm also invested. If I'm just going to bed and sleeping all night, then I'm too conservative. So we need to have a little bit of risk, Peter, but we need to control our risk.
What is the logic? Is it effective to consider moving to more defensive strategies or conservative options during the midst of market volatility?
Well, I think the thing is that most people, we've already experienced a lot of the downturn. So if you're still in the market, I looked at my portfolio the other day, and where I had gains, now I have losses. But it's paper losses, and so I don't really need the money, so I'm not taking the money out. So I think that if you can weather the storm and continue to dollar cost average because we're buying stocks now at a lower price. I mean, if you look at Nvidia, it was over 200. It's down now to about 118. The great time to buy that stock as we wait this thing out. Whether it goes down further or not, it doesn't make any difference if we're dollar cost averaging in. So I think it's a time to be in the market, but I don't see any problem with we had this tremendous run up, and because we did, a lot of people got more exposed to tech and certain things, certain areas than they should have been. And so now it's a great time to tune it up and get your risk tolerance where you need it.
Are you finding that the people that you are talking to, John, are falling in the category of we've seen volatility before, we'll make it through this, or are they sort of saying to themselves, well, this time could be different or is different?
Well, it's a little bit different for us, Peter, because we have on the money that we manage, we have what we call discretion. So we manage that money going into the market and out of the market at our discretion. So 4 weeks ago, we trimmed back our tech positions and got a little more defensive. And so we've weathered this storm a lot better than some people. And so our clients, they aren't calling. I haven't received a call. I'm happy to say, I told you earlier, I'll be glad when the tax is over because, I don't want to have all those calls. I'm so glad the tax season is over because I get more call about taxes than I do about the market. But, I think that I looked at one client the other day who has an account he manages and he's lost half his money. Now, should he have done something sooner? Yes. But should he have gotten totally out of the market? No. He should have just gotten more conservative.
John, and I think that's a part of the conversation today here is that risk can be managed and investors are
Mhm.
taught to take risk, but it's not about being reckless. It is calculated exposure. And
Mhm.
you at Gulf Coast Financial Services, with the discretion, with your team and the options that you have, you help clients implement these defensive strategies so that the risk is not borderline on reckless.
Well, that's right. I mean, we don't want to lose. If we're in retirement and we're using our money for our retirement, we can't afford to lose 50, 60% of our money and then still expect to draw out what we're drawing to live. And so with inflation going up, things costing more, we have to maintain our portfolios. Our main concern is being able to control what we have and not losing any more than we need to or have to. But at the same time, I may not be able to make anything this year, but over the long haul, I will be able to make money. And so I have to be so balanced in my risk that I'm keeping up with inflation, keeping up with my withdrawals so that I've got that growth bucket working for me for those things that I really need later on. New roof, new car, those repairs, new air conditioner. Those are the things we have to cover, plus inflation as we go forward in retirement. And we can do that if we have a risk tolerance where it needs to be and we're conservative enough and follow the market. It's not a time, like I said, it's not a time to overreact, but it was certainly a time to react and look where we were and look at what we've done and make some changes in our portfolios going forward.
Again, we are talking with John Kuykendall, founder at Gulf Coast Financial Services. If you've got questions, if you are concerned, if you are not sleeping well at night with the market volatility, or just want to kind of review and evaluate your portfolio and the risk exposure, make sure it is in alignment with your comfort level and focused on your long-term goals. That is the Financially Focused Written Retirement Income Plan. You can get that by giving them a call, 386-755 9018 386 755 9018. So, John, if we are maybe a little more adverse to risk than we once were, or not wanting to take as much risk in the market, what are some of the more conservative minded or defensive investment options that are available to us?
Well, certainly, Peter, there are some things that we can do to hedge our volatility. We can have more money in the bank, more money in cash, because cash isn't going to grow that much for us, but it's not going anywhere. A dollar's a dollar. Um, Money market accounts, we can find those in the 4.5%. Um, the fixed income part of that, which has gotten a bad rep over the years because it doesn't make as much as a stock portfolio over time. People have gotten out of it and decided that they would rather be invested in the market. Annuities, fixed indexed annuities, those are certainly a way that we can free up some of the risk in our portfolios, because while they're not guaranteed by the FDIC, they are guaranteed by the insurance companies that issue them. And we can get a fixed income, or, we can get a index that's going to be part of the market, but I can't lose my principal. So, and those have, income streams for life, and nursing home health care riders that certainly come into play later on. So those are all good ways to make up for some of that volatility. And then the other way is there are stocks that aren't just defensive sectors. The Walmarts, the AT&T's been doing well through this whole thing. Pays a good dividend too. Blue chip dividend stocks. Look at those. And so there are some ways that we can get some of the risk out of our portfolio, but still make a return.
Consumer staples, right? Those things
Yeah.
that sell, and the companies that sell them, regardless of what happens in the economy. I've heard, not a recommendation for any particular company or anything, but I heard soft drinks and Coca-Cola company, a rather resilient one as well. And then utilities, everybody needs their lights on, regardless of if the market's up or down. Everybody demands
Yep.
health care, regardless of the
Yep.
conditions of the market. So those kind of sectors of the
Right.
economy, if you will, right? Those are the ones that are more resilient and staples that we need. And I know that John, when we talk about stocks, like that is equity, right? That is investment in the
Right.
market. And then you mentioned the annuities, and bonds and fixed income are all kind of also considered on the other side of the equity market and tend not to be as volatile, but perhaps like there is a use and a time and place, but not necessarily 100% safe and guaranteed either.
No, I mean, we're loaning money to a company. So we need to make sure that the underlying companies are good, and that the portfolio, I mean, if we buy individual bonds, we need to make sure that company's, if we buy a bond mutual fund, we need to look at the history, we need to look at the rating, and we need to see what the dividends are paying and what the dividend yield is. But there are certainly some good examples of that, Peter, and we can go long and we can go short. So it gives us a way to kind of ladder in the market. But at the same time, like you said, bonds can be risky. High yield bonds, we're taking more risk buying companies that aren't double A. And so we need to be careful when we do things. And to the longer, if I buy a bond and individual bond, and I take a 25-year bond, then I can't get par for that bond or my money back until it matures. I'm going to get whatever the market is. If the market's down, then I'm going to take a loss on that bond because interest rates went up and I've got a low yielding bond. So, you need to understand what you're investing in and what the consequences are, what can go wrong.
If we are properly positioned, if we have a plan in place, should give us more confidence despite volatility or even in the midst of it, John. Maybe it's time to put some extra cash that's been on the sidelines to work, make contributions, rebalancing, Roth conversions. There are a number of strategies that having a plan in place is going to allow us to identify. When there's sort of chaos, there are also opportunities.
Well, that's right. It's going to give us the ability to look at all the opportunities we have and try to make the most of them. I mean, what we're trying to do is maximize our returns, minimize our taxes, and give us the most disposable income we can have, because retirees are going to need more and more disposable income. I mean, everything goes up. Medicare Part B is going to go up next year. Even though we get an increase in our Social Security, maybe things are going to happen. We've got, as seniors, we have tremendous challenges coming up. New tax laws, Social Security running out of money, Medicare running out of money. All those things have to be addressed, and we have to be able and nimble enough to have a plan in place that, if I get 70% of my Social Security, how's that going to affect me? If my spouse dies and I lose one Social Security, how do I overcome that and still be able to have the kind of retirement I want? Those are the things that the financially focused income plan bring together, along with Social Security, Medicare, everything, looking at it from one standpoint. so we can give you the best retirement that you can have and a plan that helps you weather these markets. Because Peter, you know, from the sequence of return, now's not a great time to be pulling a lot of money out of our accounts, because what we're doing is we just make our accounts crash quicker. So what we need to do is have a plan in place so that when the market is down, I can draw less from my growth bucket, which is the stocks, and take more money from other buckets that I've set aside that help me weather through that.
Diversified strategies, long-term outlook, asset allocation. John, there is certainly a reason for looking at the shakeups and taking advantage of opportunities, but long-term traditional investing has proven to work for long-term growth above the rates of inflation, including dollar cost averaging. Sometimes capital preservation strategies, yes, are important, but should we be focused on income generating investments more so as we get to and to help us make it through retirement?
Well, Peter, I've always said that, you know, income planning is something that we should have been doing a long time ago, and we've just started it probably in the last 5, 6 years. Income planning gives me the ability to have a predictable, sustainable income that's going to meet my needs, but at the same time, be able to have me set aside money for that growth bucket that we talk about that's going to give me the money to make up for inflation, and as I need more money, I'm going to be able to do things with my growth bucket so that I can pull money out and increase my income. Certainly, as we get older, we're going to need predictable, sustainable income. You know, the worst thing is I have a client who's 93 years old. He went through 2009 and lost 50% of his portfolio. He still had it up, but you know, we've been able to keep him going from then. But the problem is that because of that, psychologically, he's afraid of running out of money. Now, we've never been able to get back what we lost, but we've been able to keep him living and keep the money coming in. But psychologically, you know, if he wanted to go buy a car, he wouldn't buy it because he doesn't think he can afford it. So, you know, we as humans, psychologically, we have to go through this, and the market will come back. The market will make something else will come up. Real estate will get big. Something else will happen. It's happened every time, you know, 94, 2000, 2002, 2008, 2009, 2012. Every time the market's gone through these things, and we've said, you know, Chicken Little, the sky is falling, and it hasn't fallen yet. So all we do is get bigger. You got to have the patience and like I said, be able to have the risk tolerance so that you're not day trading and you're in the market, but you're doing it the right way.
Well, market volatility can certainly be unnerving. Having a plan in place helps psychologically and with the long-term financial results. How prepared are you for market volatility? Well, when we see it, the proof is in how you're feeling about your financial progress. And certainly, if you would like to get a plan put together, if you've got questions or concerns or would like an analysis of your current holdings, that's what the financially focused written retirement planning opportunity is all about. To get your financially focused written plan, pick up the phone, give GulfCoast Financial Services a call. That's where you can find the financially focused written plan. And they are happy to talk with you and put that together along with you and for you on your behalf. 386-755-9018. That is 386-755-9018. 386-755-9018. John, we always appreciate the levity, keeping us level-headed and sane amidst the chaos with that financially focused plan for our future in sight. Thank you.
Thank you, Peter. Yeah, it's turbulent times, but we'll get through it.
Be sure to like,
Everybody
subscribe,
Let's
share, and tune in
week.
for more financial focus by visiting GulfCoastFinancial.net. The information presented on this program is provided for informational purposes only, without warranty of accuracy, completeness, or suitability for a particular purpose. This program is not intended to be and does not constitute financial, investment, legal, or tax advice. This information is general in nature and not specific enough to be construed as advice. You should not make any decision based on the information presented on this program without independent consultation with an appropriately licensed professional or competent advisor. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs. Early withdrawals may subject the owner to penalties, fees, or taxes. John Kuykendall is registered with and securities are offered through Kovac Securities Inc., member FINRA SIPC, found online at www.kovacsecurities.com. Advisory services are offered through GulfCoast Financial Services Inc., a registered investment advisor in Florida. GulfCoast Financial Services Inc. is not affiliated with Kovac Securities Inc. or Kovac Advisors Inc. Past performance is not indicative of future results. All investing involves risk. Investment decisions should be based on your own goals, time horizon, and tolerance for risk. Due to various factors including changing market conditions and/or applicable laws, the content may no longer be reflective of current opinions or positions. GulfCoast Financial Services Inc. has been named as Best of the Best since 2015 in the category of Best Financial Advisor in the Lake City, Florida area. The award was based on receiving the most votes in this category from a survey offered and tabulated by the Lake City Reporter. No direct or indirect compensation was provided to the Lake City Reporter and/or any raters, and the award is not contingent on future direct or indirect compensation offered to the newspaper and/or raters. Portfolio performance is not a criterion, and voting is open to any readers of the newspaper.